So many of you already know, if you're paying attention to the credit space, credit building, that payment history is the biggest elephant in the room when it comes to your score calculation. It is literally 35%. If you're looking at stuff like Vantage, sometimes it's up to 40% of your score is payment history. That being said, it's one of the most simplistic parts of your score overall as well, meaning that you just pay your bills on time. The end. That's the way to master that particular metric in your algorithm. But for many of us, life happens. Missed payments come about. Our overall charge-offs come about. These things happen. The vast majority of us, even the very successful amongst us, have been through tough times and have experienced late payments or outright charge-offs and collections at some point in time. This video is intended to give you a breakdown on how you should deal with this if you're experiencing it now, or if you're on trajectory to some financially hard times and nervous you may experience it, or have already experienced it in the past and you need some guidance. You haven't had any luck with getting it resolved, and you need some guidance on how you can go about bettering your financial situation or your credit profile in particular with late payments. This video is intended to give you some insight and some guidance around that. This is JP from Blueprint for Prosperity, helping you to increase your network, relationship banking, maximizing your borrowing capacity, proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity. So late payments are a nightmare. We know that already. What you have to keep in mind with late payments is, the number one thing is, you want to do your best to get current if you are in a situation where you currently have late payments. You want to get current as soon as possible. If this is something that's historically happened to you already, and it's been some time that account's not open anymore, whatever the case may be, we're going to talk about how to approach that in a moment. But if you're in a live situation where late payments are occurring on an active account, stop the bleeding. You need to get those late payments caught up, get current, stay current, or you need to contact that lender and creditor and work directly with them while that account is still active. Believe it or not, they are not excited to see you charge off, or, to charge off or have to continue your late payment streak. Even though there's fees and interest and stuff that they charge, and they do make money if you pay that back, they're ultimately in a high risk situation that their money is not going to come back to them as intended. And that is not ideal for lenders, believe it or not. Even though there's this massive myth out there that lenders just love and salivate at the thought of you failing at your finances, it's not really the case. Most institutions and credible lenders' business model works best when it's successful borrowers. So catch up as soon as you can, or work with your lenders and creditors directly. Trust me, they will do their best to work with you if it's realistic. If you have existing late payments on your report, whether it's an active or past due late payments that have happened already, you need to make an effort now to weigh out your ability to either try to challenge them directly with the creditor or lender and see if you can get a goodwill, a grace situation or goodwill from them. If that does not work, then you can contend with the idea of challenging it through credit repair. You can do it yourself if you want to do your own work with letters and work through the bureaus. Today's technology and information out there, quite realistic to do disputes online yourself directly with the bureaus, or send letters out yourself directly to lenders and creditors. You have to understand something about working with bureaus on credit repair. It's not really understood or known, but believe it or not, when it comes to the credit bureaus, their clients are typically the lenders and the creditors. So while they're the ones mediating your credit repair process, they are typically better aligned with the lenders and creditors than they are you as the consumer. It's something important to keep in mind, because that means that they're not as incentivized to do the best job in helping to get your credit repaired if you decide to go that route. And I've dropped a video recently, maybe not even a couple of days ago, that explains that credit repair is a really dark, sticky space if you're not careful. So you can decide to do it yourself. You can look into trying to find a legitimate company and hiring them. The reality of it is late payments are tough, especially if the account's still active and open or recently closed, with all of that information being fresh. The big strategy and big tip in this video that I want you to focus on is keeping in mind that your late payment segment is broken out into a percentage. What that basically means and how it can work in your favor is, instead of taking all of that money and pouring it into a, God be with me credit repair strategy, what you can do is take that money and start to open new secured accounts at multiple quality institutions, credit unions, small banks, online lenders that do credit builder accounts, secure credit cards, and secure personal loans. And you want to do as many of them as you can. You're going to take a beating from having a lot of new accounts at one time in the short term. But you want to do as many of these accounts with no inquiry as you can, which many of them offer that. And once those new accounts show up on your credit report, you're going to take a hit because it just looks bad when you have a bunch of new accounts at one time. Don't worry about it. It goes away over a pretty short span of time. So like 6 to 9 months or so, you'll see that, negative connotation fade off as those accounts start to get to that 6 months, a year mark. Why do you want to open multiple new accounts as often as you can? And whatever cash you have available to work on your credit, why do you want to make this investment? It's a percentage. It's an algorithm. When you have 2 accounts on your credit report with late payments, and that's like your whole credit report, or maybe you have 4 or 5 accounts and you have a couple late payments on a few accounts. Statistically speaking, whatever number of accounts you have, let's just say for numbers sake, you have 10 accounts, you have 3 late payments. That means you have a 70%, positive payment history. And if you ever take a close look at FICO or Vantage scoring models, you will see that there's a difference between 100% paid on time, 99, 98, and 97 and below is where it gets really bad. It's a percentage, as I continue to say. So what that means is instead of having 10 accounts with 3 late payments on it and only 7 positive payments on it, you opening new accounts and making good payments on each of those accounts. Let's just hypothetically say you open 10 more accounts in a short window of time. Now, the first month you have 10 more positive payments showing up. So instead of you being at 70%, you're gonna now be 20 accounts with 3 late payments, 17 good paying accounts. I don't have the statistics right now. I'm sure that's upper 80s to 90%. Now you see where this is going, hopefully mathematically. You're going from a 70% positive payment history to an upper 80 or 90% positive payment history. And that's going to expand every single month that you're making positive payments. And the more accounts you have, the faster your payment history jets back up to that upper 90 percentile. You're going to have to deal with those late payments. It doesn't stay on forever. You probably can see them on there up to 7 years, but they start to weigh less and less as time goes on for 2 reasons. Number 1, they're getting old. Number 2, hopefully you have more positive accounts outweighing them. And so what ends up happening over time is you'll have dozens and dozens and dozens of payments, positive payments, stacking up on those few late payments. Those 3 or 4 late payments look really rough when you only have 10 payments on the account, but it looks minuscule when you have 20 or 30, 40, 50, 60 other payments coming in over the course of months in a year or so of time. So the strategy here is stack good payments by opening a bunch of inexpensive but high quality credit builder, secure credit card, and secure credit loan accounts. You're going to take a hit for the new accounts all at one time, but the fact you're doing it all at one time, they're going to age all together and they're going to all grow in payment history all together. So as your late payments fade into the background, the credit report's going to jump exponentially at some certain point in time, and it won't take 7 years to get there. So hopefully this strategy makes sense to you. I'm trying to teach you how to empower yourself. Take that same money that you will sink into some random credit repair company that's promising you the world for, potentially $1,000, $2,000, $3,000. If you take that same cash, you can get 3, 4, 5, 6, 7 different, secure credit card or secure loan or credit builder accounts because they don't require a ton of capital to get started. In many cases, $100, $200, 25 to 30, $50 can get these accounts started and get that ball rolling for you and do way more guaranteed impact. Keynote, guaranteed impact on your credit by improving your credit history, by bulking up your positive payment history, and can do it in a relatively short span of time. You'll be surprised. Instead of gambling it on a credit repair company that's not guaranteed to get the job done or to do it legally or legitimately, or not mangle your personal information on your credit report, trying to distort it to get stuff off of your credit report. So keep in mind, many credit repair companies don't even allow you to open new accounts while they're in the process because they want your profiles to be ghosts So they can challenge the fact that you even were the one who had those accounts in the first place. If you're putting active new accounts on there in the middle of your dispute process, it can completely distort the whole campaign. So this puts you in a tough position because now you can't build positive payment history until these credit repair companies are done, which can be months, in some cases, years. That's plenty of time for you to stack up a bunch of positive payments instead of waiting on these credit repair companies that aren't even guaranteeing for sure results. And even if they're done and they do get the job done right, you still have no positive paying accounts left on there, or many left, because they've swept most of that stuff off, trying to get the late payments off or the charge-offs off. So I hope this makes sense. Don't get sold a dream in this credit repair space. Take your capital, start with your own strategies. And then if afterwards, if you want to take some excess capital and give a couple decent credit repair companies you find a try, go for it. At least these other accounts are already in the mix, already growing history, and they're out of the way. There's nothing, there's no interference with that. And that's what's important, adding positive payment history. So I wanted to bring this information to you guys again to empower you. I appreciate you tuning in. I enjoy bringing you the content. As always, I want you to stay focused, stay in motion. I'll see y'all soon.